The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon Eastern Time, 877-927-6648. Love to hear your questions. And most importantly, great program as always here at TFNN. Just a fabulous few hours we've had already. Day hasn't even begun. Just after 11 o'clock in the morning. So, actually, this is one of those times where I'd even recommend that in terms of knowledge base, in terms of timing, in terms of using, whether it's astrological, time sequences, Fibonacci time sequences, whatever it is that you're using, I consider, you remember yesterday I said that I thought that it was a really important day in terms of it could be just a nondescript day, and that would be fine, but a very important day if certain parameters were met. And on the upside, we did go to a leg D in the Dow. So I'll go through all that as we move along. Let me just run the numbers. Dow, the E-mini right now is down 5 at 1982. Look at that W formation. Very important. Look at the ceiling at 2011, somewhere in the 2010 to 2012 area. Breaks that significantly, then you can start to look at 2020, the 200-period moving average. But my pattern that I always talk about, the lowercase h that can go to a lowercase m, is still the two opposing. There's the soft W, and there's the soft h that goes to a lowercase m pattern, second arch. So we'll talk about that. There's a 120-minute chart. You can see this oval formation, what I call the stork leg formation. I don't want to get into that right now, other than to say at 1986, something else is going on in the E-minis. I'd have to call that probably G/C. And if it breaks underneath the 1971, that's going to be quite a serious decline, very short term, and it impacts other things. So let me just go step by step here. I wanted to show you because the patterns that I look at, repeat, they are fractals, meaning like a snowflake that has a tiny little configuration. That could be a larger configuration or smaller, but it's still the same kind of configuration. If you use Fibonacci aspects, you can complement those. More importantly, let me look at this. This morning, what I do for my subscribers to my opening call is that I show the E-minis, I show the daily. Sometimes I used to show the weekly quite often until we made a significant down arrow, meaning we're in a sell mode in the weekly chart. And then I went back to just the daily and the 120-minute chart. Most importantly, last few days, the 10-minute has been so important. Remember, on Friday, we had Freeman calling early in the morning. At 1888, he had gone long, and it was just a spectacular move. So I wanted to show you here, these are patterns, as I say, that repeat over and over again. The cup formation, the arch formation, the cup can be a form of a V, and the arch can be a form of an inverted V. It doesn't matter, it's the same principle. Slightly different outcomes, but the same principle. There's another cup on the left side. And what I'd shown this morning was this here. I showed my subscribers, also sent it to the den, and I showed that here's the cup formation, and that there was a dashed Chapman Wave inside wedge target resistance line going towards that 1986 area, right over there. There was a left side, right side price time match, and that said somewhere around over there between 9:30 and maybe 10 something, about 10-ish, there should be a test of that high if there's going to be a leg D. Okay, so that is history, because that was the anticipation. This is the result. We went to a peak C1, peak C2, double top, pulls back, and then whoosh, right up there to the bar within 10 minutes. It goes to exactly that area that we were looking at, and the high so far is 1989.25, and he has that consolidation to the side. And this is going to be very important. Why? Now I can get into the nitty-gritties. And as I get into the nitty-gritties, just so that I don't run out of time, Dow's down 16,895. The E-mini futures this morning were down at 19, what was the low there on the 7th? 1970 something. Let me just check this out. 1971. And we're trading in 1982. It's 11 points. That's Dow over 100 points difference from intra-morning, early this morning to where we had just been. So here we go. The Dow, and I'll do the charts at the same time. The Dow is now down 21 at 16,890. This is very important because if there is going to be that acceleration takeoff phase, then we should get, you know, my rule of 136. There should be no more than one bar or maybe 3 bars if this is a peak D today with no new high in the Dow above 16,963.30. That would suggest if there is no high and it's a peak D and tomorrow we go to a higher high, that would suggest that we're in a kind of an acceleration phase to the upside, and you must constantly look at this this is the perfect time to be talking bifurcated market. The IBB is down, is down 8 at 299. The whole healthcare sector is very weak. Most importantly, what we're looking at is that there's a rotation into the deep cyclicals, and that might not last, but you've got to treat it with respect. And that produces a bifurcated market. And that says that the Dow could be stronger than the S&P, down 16.16%, S&P down 0.33. That's what you get in this kind of bifurcated market. Now what we're looking at is, most importantly, the weekly chart went to a slightly higher high. So that's made a B, but it's still within the arch formation. And you've just gone to a D in the well, you went yesterday. You went to a D in the 120-minute chart in that same left side, right side price time match. Look, there it is. From there to the midpoint. That's exactly the plumb line right there. Whoops, plumb line right there. So yeah, we've got the Dow down 26, and there's your plumb line. You made you got to the level of 16,933.43 in about 5 or 6 bars early. And that says that's a good sign, but you have to hold support and then take out the previous high to say that you've got a high level base in this consolidation. So this is going to be very important because 16,800 is going to be key support short term. All right, let's go on to the S&P. Now I can move this aside right here, make it a little smaller. This is the 120-minute chart. Right there. Okay, here we go. So the monthly chart still says that the Chapman Wave Roman candle suggests very strongly that at any point in October, if there are maybe 2 or 3 closing lows below 16,000 in the daily, that'll impact the weekly very negatively, and that will suggest that the monthly chart is correct in the texture that I put it in as a Roman candle that says the low is going to be taken out at 15,370 at some point over the coming weeks. And then we'll see what would be the counter to that. And let's move on. We've got the S&P. And this is going to be very interesting because the S&P right now, having more of the biotechs, has not made a leg D. It is underneath the previous peak C. Monthly chart, same thing as the Dow. Chapman Wave Roman candle. Boy, I have respect for these candles. Now, if you take a little while to rally, that the 2012 9-period moving average in the monthly chart, that's going to be serious resistance. Close above that at 2018, I have to say, you know what? Something else is going on, and I'll be talking about that a great deal, believe me. So in the meantime, you've got the QQQ series is down $1.15 at 104.48, impacted very negatively by the IBB just at this particular moment, but it has 104.03 as key 9-period moving average support, and the monthly chart funnily enough, it looks worse than the Dow and the S&P, even though the candle, the Roman candle, is way up there. Okay, let's go on. IWM right now is trading at 114.19, down 31. Holding quite well, but a lousy weekly chart, lousy monthly chart. Because you remember what I spoke about yesterday? You've got a fabulous up channel. It held support. You've got to respect that. If the IWM, the Russell iShares 2000 ETF, breaks at 114.13, down 36, if it takes out 106, closes under 106 at any point in the next month and a half, 2 months, watch out below. Then all of a sudden, you're going to get an acceleration to the downside. Let's go on. We're going to go to gold. Gold right now is trading at, if I can just get that. Oh, I don't have it. Okay, gold is down between $4 and $5 at 1,144. Had a great move, but it has to pierce. Remember yesterday I was talking about that down trend line, the dash down trend line. So unless gold can push above 1154, close above 11. It's no use pushing above. It needs to close above that so it can tackle the left side high of 1156.40. Let's make it simple. Gold at 1160 is really positive on the short to intermediate term. Monthly chart, we can't even talk about it because it's just a horrible looking monthly chart. Now let's go on to, we're going to go to the TLT. A lot of people wanted me to talk more about the TLT, so I will. The TLT, actually there's really not much to talk about. What am I supposed to say? I've been talking about this for 12 years. The Japanization of our bond yields. Yields are going to go down. They're going to stay down. The Fed is going to be afraid to do anything. There's nothing much to talk about. It's in a trading range. I will start to really talk about it if the TLT closes under 114. It's at 122.99. A close below 114 is absolutely a game changer in terms of yields. Closing above 127 just says going to zero. There's just nothing the Fed can do. All right, let's get that out the way. And then someone asked me, could I just quickly do my Dow quartet? GE is acting just beautifully. I mean, it was at $19.37. Let's just say you couldn't get it there. I was dumb because that was, in my mind, I said, you know what? Just put in a crazy bid a long time ago. Just put it in at under 20, make it 1990, and just put it in and see what happens. So you put in a 1-point stop, or even a 2-point stop, 10%, but on a small position. Never did that. But that would have been, I think that might have been bought. However the speed was, under 20, I think you would have got it. So in the meantime, 1937, what is the high today? The high yesterday was 27.77. Today's 27.73 in leg D. I like the way G is acting. I think it's telling us about the cyclicals. And look at IBM. Doing well, and Triple M and UTX, my Dow quartet, doing nicely. I like what I'm seeing in the cyclicals. Basil Chapman, I'll be back. Dow's down 17, S&P's down 6.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and Dow's now only down 2, S&P's down 4, and I was asked about FANG. I'll do that real quickly. It's Diamondback Energy Inc. This is trading at 73.42, down 23 cents. I was going to say that it's an energy drink, but it's obviously not. It's an energy company. Chuckle, chuckle. So it has a history of going to peak D's and E's. So I'm thinking here that this is leg C, probably a peak C today, and it should go to a D. If it can close above 77, let's call it 78. It's a 73.31. Excuse me. If it can close above 70, if it can close above 78 in the next 2 weeks, that starts to improve the weekly tremendously, and would suggest that because the weekly is improving, that we have a chance to see in the monthly chart, not the arch formation, the H pattern that I always talk about, but in fact, a test of the, so what did I say? If it closes above 78, yeah, then it could go for a test of the 80 area to 82 to make a little double top there. We'll see. But in the meantime, it's one of the better acting energy companies I've seen in a while. So here we go. And I thought at first when you said FANG, Jay and the Den, that you were talking about Facebook, Amazon, Netflix, and Google, but you're not. So let's go to Mark in Denver. Mark, how are you?
Basil, how are you?
I'm well.
All right, I don't want to be a guest host today, but I do want to just ask you a couple quick questions.
Okay. Yeah, I know what you mean.
Hey, so I'm looking at the charts of the Qs and Apple, and as usual, they seem to be very similar.
Yes.
And since the since the spike low on the 24th, we've got a peak A, a peak B, and a peak C on both charts.
Actually, what we've got on the daily is a peak C1, peak C2, and the C2 acted exactly as you would expect. As you would expect a D to act. So this pullback now says you've got to take the H pattern that's forming as something very serious. That's number one. Number two, the arch formation, a peak E top at 134.54 in the weekly chart of Apple. And I've been talking about this for some time and saying, as far as I can see chart-wise, I'm not talking fundamentally, although I could actually give you a case for the fundamentals. In fact, here in Chestnut Hill in Boston, in the Newton area where I live, the Apple store has just moved from where it was, just one or two stores down, I think maybe 2 stores down. And I was there the other day, and it's completely different. You have far fewer people. Now, they might be doing a lot more online, but the fact is, if you do online and you have tons of people in the store, you know you've got an amazing product. This is the first in years. This is the first, and this I call representative of a lot of things, especially here in Newton area. We're always the last to get any particular fad and make it a big deal. So I'm looking at this and I'm saying, wow, I think that Apple has made a hat. Well, I've been talking about this for a while. I think Apple has made a hat trick top, meaning that the high of 134.54 will not be seen for quite a while, and that the big thing is it needs to close above 117 close, I mean, on a monthly basis to really start to say, okay, this is just a big rectangle formation. As I'm seeing it right, I might be not answering your question, but as I see it right now, Apple has high vulnerability, and that vulnerability is suggesting technically, and now I forget the fundamentals, that the monthly chart MACD right there is crossed negative with a very wide beta, theta between the green line, the 9-period differential, and the red line, the slow-moving average. The histogram has gone negative to -2. The relative strength is way down. It's still at about 55, but it's getting closer and closer to under 50, and most people would say a relative strength under 50 is not good. And the on-balance volume has turned down significantly, A, B, C, D, E, F. It's made a G top, and that coincides with the F top in the monthly chart. Peak F in the monthly with a Chapman Wave Roman candle. I have to tell you, I think that Apple has seen its days for now until a whole new product cycle. Maybe it's a TV, maybe it's something else, until a whole new product cycle comes on board. And I think that it's highly vulnerable. If it closes under 105, you're looking at a different Apple altogether. So this is a very, very important period. So, okay. I'm sorry. So, what was your question?
Well, so you've got the chart slightly different on Apple than you do the Qs, because it looks like Apple, you've got a C1, C2, and my guess is it's just because it's only 20 cents difference between those two peaks. But the Qs look like they still are in a peak C.
Yes. Actually, you want to hold on? I won't make you a guest host, but I just want you to cover this because it's two areas that I did want to talk about. If you got to go, you got to go.
No, I'm good. I just want to see if we're going to get
okay, we'll be back with Mark. Dow's up 15, S&P's down 2. I like what I'm looking at. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. Up 25 in the Dow and down 1 only in the E-mini. So now let's go back to Apple. What we're looking at is Apple has got a trading band and it's got really important support, just near-term support at 107.36. I'm suggesting that it isn't that level that'll start to crater the price. It really a close under the low of this bar here of the 26, which is at 105.05. So close under 105 in the next week or two would be very negative for Apple. Meantime, it's just stuck in the range. I can just draw this rectangle right here. Now, what's different about Apple to the QQQ series, 1, 2, 3, the QQQ series is that the pullback over the last 3 sessions after making it even made a little bit of a higher high. 105.78 was the high on the 5th. 105.86 was the slightly higher high. So 7 cents more. You know what? I think that as a trade, I would avoid Apple, even though it could bounce a little bit. I'm not sure it's going to be able to make that leg D mark. That would be above 108.73, which you're kind of looking at it as if there's a possibility that maybe, and that's a big point move going from the 104 to 108, just
Right.
on a stock that's kind of stuck.
I guess my bigger question is, I mean, do you see a D in the SPYs and in the Qs in this recovery mode here?
Do I see a what?
I guess getting to a peak D in the Qs and the SPYs and then therefore maybe that translates into some strength.
Okay, that's a great question. That's almost like the question I had from a couple of people yesterday. So here we go. The Q's right now in this rectangle formation. What happens in a rectangle formation like this is that the longer you take to try to break above, the harder it gets. But it's a real simple technique that I use. If there is a sharp close, now sharp is not a good word to use. If there is a close above 109.30 in the QQQ series, today's Thursday, between now and a week from Friday, if there is a close above 109.20, 109.30, I mean a close, and it can't just get there. Not only will I consider that maybe a leg D, I will consider that you've raised the base, because in my technique, that arch should be very strong resistance. You might go above it. You're probably going to close below it. Look what happened to the Dow today. Yesterday it went above, and it went above. It didn't close above 16,933, but it's a very good candle, and the stochastics at 85%. The MACD is very strong. This is a completely different. This is the breakout pattern that you want, which is one of the reasons why in my newsletter we're trying to build up some long positions in the better looking stocks and shorts in the weak ones. And this is a better looking stock. The Dow is acting very, very well. That doesn't mean to say that it's going to break to a new buy mode in the weekly chart. It does say that if the Dow closes significantly above 16,933, that says that you can start to look at 17,291 as a target. So that would imply the same reasoning, but it's going to be so much harder, especially with Apple being weak and the IB being weak. To get the Qs to go to a 109.20 close there, but if it does that, I would say the Qs can have a pretty good rally, and the high that was made at 108.73. So then all of a sudden, you've got this really ugly candle of August with a high of 111.46 as potentially being your upside target area. All I can say is at this particular point, because I'm considering that it's a bifurcated market, there are enough strong stocks to help certain indexes. There are enough weak stocks to drag if there are more weak stocks in any of the other indices. So in this particular case, I'm saying that it's going to be really tough. I think that the Qs are just stuck in a trading range. They might have good support at 104 to 103.90, and then it could try to come back again. But if it does that, it's lowered the upside. And on the upside, if it does get to 106.80, no, this is one step at a time. If it goes to 106.10, it's a good sign, and it says it's trying to work its way towards the upside. As a trade, I think it's much slower. I like speed, so I would probably stay off the Qs as a long position. I'd stay off the IWM as a long position, and I'd be sticking more with the Dow. And I think the Dow is the one. And the SPY, which is your question, the exact same thing would apply to the SPY. It's not as good as the Dow, and it would have to go to not 202.89, 202.90 for leg D, but it would have to go all the way to 203.50. 203.14 is the 200-period moving average. It would have to close above that. And if it can close above it in the next week or so, then I'm saying, hey, we can continue sideways. And you remember the SPY, I had the rule of 28 for the price volume spike low. And if it closes in the 203s, I can say, now we can go another 28 days, and that would be from the first 28 days. So I think I've clarified my positions with numbers.
Yeah,
and the SPY would fail if it closes under 195.50 to 195. If it closes below that, now it's making lower highs, and it's probably going to make lower lows. Hope it gives you some sense of what I'm looking at.
Yeah, very thorough. Thank you.
Thank you very much for calling. So that's Mark in Denver. Now, I just want to add for, I think Julie it was. Julie, look, here's the SPY. You wanted me to look at the S&P. Look, here's the SPY. It's actually holding very nicely. Look, there's that Roman candle. It did go down below the midpoint. It didn't stay there. You remember that was that Monday spike low? So that you can't even count that. It wasn't two days for the Dow under 6.2 out of 3 under 1,600. 16,000, and the SPY comparable level would be, let me just do this right here. The comparable level would be 192. A close below 192, and it's trading at 199.21 right now. That would be 700 points to the downside in the Dow. But a close below 192 says, uh-oh, you're going to test that major uptrend line, and that major uptrend line says, yeah, a close below it, especially since we tagged it in that August the 24th low at 182.40, a close below this pink line says, uh-oh, we're going in for that next down phase. I just think that with the rotation going on now, I think we can keep going sideways for a little while longer. And you remember what happened with the GLD? The GLD made that arch formation from the top in September of 185.85. Then it made another arch, so the lowercase h became a lowercase m, then plop. Then it made another h to a lowercase m, then plop, and another one, just an h. Now we're looking at something, this is the fifth time, this is trough E, this is trough F. So trough F, you can expect it could be at least an attempt at a bounce. So I'm still calling this in gold, I'm calling this the first real attempt in the monthly chart to be able to break for the GLD, to break into the 111s. I think it must be more than 111. I think it's 112. Yeah, to break into the 112s. And if it can do that this time, you've got a sideways to up move in gold, and I suspect that the dollar DXY will be coming down, and it'll be testing the 94 area, and that's going to be very important. The dollar right now is at 93.38, holding trendline support, and then this one here that was support before, and then was resistance, became support, says it right there at the 94.47. Just keep that in mind. If the dollar closes for 2 out of 3 sessions below 94.47, you're looking at the H pattern becoming an M pattern, and you're going to have a serious test of the 93s. So, boy, I think we clarified a bunch of things there. All right, here we go. I wanted to, and then EEM was Julie's question. Could I look at, EEM, monthly chart. I want to show this. I meant to show it yesterday. I ran out of time. See this 200-period moving average? You see that cluster formation in the iShares MSCI Emerging Market ETF? Look at that cluster of 1, 2, 3, 4, 5, 6 bars, and then bam, it went to the upside. Now we've got 3, and you're starting to make narrower and narrower ranges. So the iShares right now, very important period, trading at 35.38 down 6 cents in the monthly chart, because this major trend line support here is like a magnet. It hasn't yet become a springboard. It'll only be called, I can only call it a springboard if the EEM starts to trade in the next week or two above 37.21. Then I have to say, hey, something else is going on. Now, I can't remember if I showed this. Oh, I can't believe we bought FCX at $8.24, something like that. And then Icon said, there was talk about Icon, and it spiked that same day. And it spiked beautifully that day. And then you had the news about Icon having a position. It went to like 12 or something. So we took really good profits. But I should have kept the core position at 8.25. It's trading at 13.22. Look at this left side, right side price time match to exactly this bar, the bar of the August of 2015. So, man, a lot of things are going on. Now I want to go to our caller. We got John in Philly. John, how are you?
Basil, thanks so much for taking the call. I have to thank you for going through all your thorough analysis, especially with Mark from Denver regarding Apple and the Qs. Could I ask you just to elaborate on one last feature on that very subject? If you would kindly bring up the chart, the monthly chart of the NASDAQ composites,
got it right
going
here.
back and including the peak of 2000. We can see thus far 2000 and 2015 show highs in the same area. Do you think this is a double top of major proportions? And if not, what might your thinking be, please?
That is a fantastic question. That, in fact, is a but they used to say $64,000 question. I have to tell you something. When I look at these charts, I have so many monthly charts that are going to E's and F's that I have to constantly question my belief that if the time price match that I have going to the beginning of the first quarter to the second quarter of next year, I have to keep going back to reassure myself. Why? Because there are so many. I'm getting tired of checking off all the different things I look at in the match between the late 1920s and the period we're in right now. So let's just go on a purely technical basis rather than get emotional or fundamental. Let's look at the technicals. If I'm looking at the NASDAQ Composite Index trading down 37 and 47.53.68 right now, it's still under the 9-period moving average of 4,753. Of 4,648. 6,004. Wait. How can that be? I must be 4,701. So the high. This is. How am I going to find it? It's being covered right now. It's elusive. There it is. I've got it. 4,807. Good. I got the right number, and we're under it by 50 points. Now let's go to the technicals. I've changed the color of this because if you're looking at it, let me just get this now so that I can see it. I want to see exactly what you can see. If you're looking at Tiger TV, I want you to that's a great. I want you to half close your eyes and just look at the chart formation. And you will see that there's really a soft U formation. I always think U formation, it sounds like some kind of something that it's not good, right? A U formation. Anyway, and it's made an exact time price match. Well, it's 2 months late. But the high of 2003 at 5132.52 was taken out because we went to 5231 in July. July is 2 months beyond the exact time match of the left side. Let me put in left side, right side, price time match with the plumb line right there. And what the right there is the high of October of 2007 at 2861. So you've got your plumb line, and I love when you can use a plumb line that gives you pretty much an exact measurement. Aha! Now wait a minute. The MACD, back in 2 bars after the October high of 2007, there was a Chapman Wave Roman candle. And look what happened. The MACD just started to cross negative, and stochastic made a right shoulder failure, and the on-balance volume made a peak D and was turning down. Look where we are right now. The MACD is turned down. This is 2 bars later. Make it 3 bars. I'm just going to 2 bars later. The MACD is turned down. The stochastic is way below where it was at the peak E high that was made over there. And what we're looking at is a situation where not only do you have a Chapman Wave Roman candle, look at this. This is what I did in my presentation for one of my webinars on the match. Look at the Roman candle immediately after the March high of 2000. Look at that Roman candle. And then there were a couple of months where there was a rally to the upside. John, can you hold on?
I can, Basil. Thank you.
Great. We'll be right back. We'll talk about the comp index as soon as we get back. Dow's up 9, S&P's down 3.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi folks, so we're back. So now I'm showing you in this very large picture, and John can see it. You've got the Chapman Wave Roman candle in March was the all-time high, March of 2000 at 51.32. April had a Chapman Wave Roman candle. It filled it in and went below. It even went above and made an H formation and then broke down. And then you got that huge 2000 top down to the October 2002 low of 1108. So it goes from 51.32 to 1108. I would say that's a big decline. And then what happened in 2007 in October, again, this time it's October, you go to the 2861. This time it's a high in October, not a low, at 2861. And that was in 2861. That was in October of 2007. And then you got in January, you got Chapman Wave Roman candle, went below it, tried to fill it in, made an H formation, and then broke down. And then there was another Roman candle, but that was on the way to the bottom, and that has other implications. Now, what we've got In fact, you had another one right there at the high that was made in May of 2000. Remember, that was the only decent pullback we've had in the market since the 2003 low. That was what, 22% in the Dow. So it goes from 2008-7, and it comes down to 2,298, and there's a Roman candle again. Now we've got a Roman candle the month after the high of July. So I have to respect that and say that it's giving me enough information together with the MACD, the stochastic, to say that this is something I have to take seriously. But, and this is the real issue. We've never had the Fed as the wind behind the sails to push the market. And that's the reason why I think that there's going to be an artificial trigger that's going to get us somehow or other. It might be just the Dow. It might be finally, I might be right, what I'd said back in the late 1990s, that the Dow would go to 17,000. I even raised it to 19,000, maybe even 21,000, I said. But money all went to the NASDAQ stocks instead of traditionally going to the Dow. Maybe this time we might see the Dow. And all I can say is that as it stands right now, the technicals are very negative, but the price is held pretty darn well in the comp index. Sometimes they can help sustain the move for a little while longer, but at some point it usually catches up where the technicals drag the price down. That's the assessment that I'm trying to make, and I do a lot of work almost every day on my overall assessment. At this point, I still have to stay with the Chapman Wave, Elliott Wave, that says this is a pullback that should have one final massive flurry to the upside that traps all these millennials that have been avoiding the stock market. I hate to say it, that's just the way markets work. I hope I'm giving you something tangible, John.
Basil, you're thorough as always, and that's just what I was hoping for. So yes, thanks so much.
And I 100% agree with you. Double tops, especially over a long period of time, you have to be real careful with double tops like that. But the technicals are going to be the proof of the pudding, because if it doesn't break, if the composite index doesn't take out the August 24th low in the month of October, you've got the setting for some kind of a rally. So we'll see what happens.
Terrific. Thanks again.
Thank you very much for calling. So, folks, I had a couple of questions. I'll do them as we're going out. What's today? Thursday. You've got Daryl. You've got just program all the way through. Stay tuned. Let me just quickly do this. Goldman Sachs. The question was Goldman Sachs? Yeah, Goldman Sachs is just so-so. There's nothing. It held the 200-period moving average in the weekly. And J.P. Morgan, you know what? Tomorrow's a technical Friday. I'm going to do a little bit more work on the financial stocks. And I have to tell you something. BRK.B, if that's failing to lead the rally, Berkshire Hathaway, you have to have respect for something that has been such a stellar mover, and now it's moving down. So I'll talk about that all. Stay tuned for programming. Check out my opening call. I think you'll enjoy it. And I'll be back tomorrow. Have a wonderful day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.